Hello everyone, I'm Isaac. Today I'm going to take you through maybe not so much just like a single review of a trade, but actually what happened over a week. This was, I suppose, like taking this one as a whole as a week is really important because this is one of those weeks where the week presents you with more opportunities to lose money than it does present you with opportunities to make money. So therefore, managing your risk, being selective about when you trade, these kind of things are the most important things to, well, first like see the signs and then know how to sort of respond and when to stay out of the market, when to be in. So yeah, we're going to look at that. So basically, we're looking at the Bund, German Bund, and we're just looking at last week, so the 6th to the 9th of April. Okay, and yeah, the key things here that you want to keep in mind as we talk is patience, and then the move will be a liquidation that we'll look at. So this is Friday Bund 1 minute chart, and we're going to look at a bit of a video or a bit of a recording of my ladders. And it's for this liquidation move. We're just going to look at the start, but the move actually carried on pretty much for the whole day. And it was quite a tricky move, and I didn't get on this. Now, it's tricky only because, obviously, to get on it, you need to really understand, why you should take this trade. And what can be the triggers for it, and that was where I struggled. Now, we're going to look at a couple of charts here just to understand this market and the environment that it's in. And yeah, we're going to take this sort of a look at it from, the perspective of the week. So first things first, this is Bund. So a while back, we made this, well, the market was really bearish on inflation. And so the market came down, it had this big sort of like capitulation move, and then ripped back up in a short squeeze, right? And that set this almost like tweezer low. And by that, I just mean the market came down, made one low, and then kind of did the opposite thing on the other side, leaving sort of two buying tails, or two tails. After that, volatility just totally got sucked out of the market, and the market just kind of started ranging. And it's been in that range ever since. And so we've got 1, 2, 3, 4, 5, and this week was the 6th week in that range. Now that's a really poor sign. The fact that the market, isn't able to get out of there. We haven't really had a good breakout. It's kind of telling us that there's no one in this market. Now, so that's already kind of a warning sign. Then what happens is that we have this poor bid. So I suppose a few things here. We've got this poor low, and the market then traded higher, and then broke that and washed down, and it's got this kind of like poor option at the low again, but a higher low. Then it's got this, and it's leaving all of these sort of poor lows as the market trades back up, and then the week that we're talking about, sort of follows the same patterns, quite like ledgy congested, and then bids. And it ends up making this kind of like double top kind of thing, sort of double failure above double O's. Now, so what this market's giving you, I suppose, is all of this terrible structure, right? So that's one key. So basically what you've got, a market stuck in a range, leaving poor structures, has really poor like lows on the swing lows, but it's still bidding. Okay, so like already a lot of this isn't making sense. So that should sort of start making you kind of ask some questions. And let's go and look at it now. So this is over a shorter time frame. So, this is 1 week, each thing between these dotted lines. Here's the week before, the week before. And so you notice that these 2 weeks here are short, and that's just because of the Easter break. Now, here's that earlier swing low. So you can see there's no excess at the lows of this cash profile. Then this one here has like a small tail, but I don't think this is I don't really see this as a overly bullish profile. I mean, like already you've got like a nice large tail there and a small one at the lows. So I mean, there is a tail, not super. We've then got poor low, the next day, poor low, tail at the high. So, and then again that after, poor low, tail at the highs, poor low, tail at the highs. And so, if you're seeing a profile that looks kind of like that, I mean, that sort of profile has a bearish skew, but oddly enough, as the market was just printing profiles like that, again and again and again. And so it doesn't really make sense for the market to keep auctioning that way. If you're seeing selling tails, you're expecting to see selling tails, at consistently lower prices. But here we've got, it's almost like the ledges are strength and the tails are weakness. And so that in itself doesn't really make any sense. The market's trading higher, but on kind of bearish auctions. And so, yeah, this really sort of begs a lot of questions. The other thing that I found on this week that told me that something strange was going on was just the fact that I wasn't getting on any moves, but then when I look back at the market in hindsight, things appeared to be obvious. And that's a really dangerous place, because sometimes if, you might go to your debrief and you'll start writing your debrief and you go, okay, because I saw this and that, but actually you're fabricating trades because you didn't have enough confidence at the start to take them on. And so that was something like a feeling that I recognized that I suppose like I used to feel in this sort of situation, and that I suppose like I felt like there were lots of opportunities in hindsight, but I didn't notice any opportunities at the time. The other thing to notice about this kind of environment is obviously volumes will remain quite low. So, on a 5-minute chart, the volumes aren't really, we're not getting sort of sustained volumes around sort of like 10,000 lots traded over a 5-minute candle, and it's more around 5, 6. And so that's sort of telling you, if we're only having those kind of range, sort of like those volumes, then there isn't really a lot of other time frame activity in the market. And so moves are not likely to continue. And so what you get is an environment with a really sort of, well, I call it low signal to noise, but really what I'm saying is you get a high number of failures to a really low number of trade ideas that are playing out. So it sort of seems like there are an awful lot of setups. And I know, in these conditions before, I'd look at a day like this one, for example, and I'd start trying to play for a break of the low. And obviously I'd get destroyed because this day kind of does the same thing again. And it would make no sense to me. And, and you get frustrated and you're going, what don't I understand? And so I think just recognizing that we're in that environment is really important, because if you can not trade these days, I mean, because also on a day like this day that I circled just before, suppose you're like, okay, I've got a really good selling tail up here and poor low. I should look for a failure somewhere in here, the market's a bit up into here, some absorption, then say to play for a move lower. Well, you can quite easily stop out doing that, because on this profile, if you look at it, there's so much reason to want this to trade down, especially with these poor lows below. And so with that much confidence and the market's actually going this way against you, it's easy to sell, go, oh, okay, I've got an even better opportunity to sell as the market's gone a little bit higher, sell again, and then just get absolutely annihilated on what looked like such a great trade. And so what this environment does is it just gives you an abundance of things that look like good structure to play trades, and so like ledgers, etc. But just the fact that it's ledging so much is kind of one of the clues that you shouldn't trade. So I've talked a lot just then about not trading, but obviously this presents you with an opportunity, very infrequent opportunities, but it does give you some. So what we've got effectively is then the market that's been bidding up, and it's been bidding up with bearish profiles, right? So tails at the top and ledgers at the bottom. Now that's the pattern, right? And we're doing that on low volume. So we're just going to assume there's low other time frame participation. And so if something changes and something makes this market bearish, well, there's not really a lot of support. If this isn't being made by big participants and we're getting these ledgers, well, the market should quite easily be able to wash through those. Now, the key is that that's the same logic that we've used that you could have used all week and stopped out every day playing the wrong way. So then the next thing is working out. So I suppose what you've got is their weakness to the downside. That's point one. So structure is weak. Tick. And we've got that. Now the second thing is you need to change. Right, and that is so key, because while this is going, in effect, the wrong way, there is, until something's changing, you're still in these days where if you're trying to sell with the sort of asymmetry or the skew that these profiles are showing you, you're just going to keep getting, destroyed, stopping out. And so you need something to change. And so one really interesting thing about Thursday is that the market bid to a new high. It left a 2 TPO tail, and then it had a buying tail at the low. So this is the first time this whole week we've had, or this whole rally really, we've had some strong structure at the low and poor structure at the highs. Now, another thing actually on this, which is not so obvious from this slide, but is from this one, is this line here, this 67s. So if you look, this has been an inflection point from the market, sort of from here, up here, here. The market's come up, touched it, and then sort of auction above, then gone down and auction below. And so you can see quite clearly that this has been an inflection point for the market. Now, if we come back here and say, well, where's 67s? It is this low to the tick. And so this is almost like a little bit of weakness in the fact that there's someone who's kind of like artificially bought this low. Not only that, have we got this poor low just below it. So there are a few pieces of information there that really make this interesting. But yeah, one of the key things for me was just recognizing that this pattern of what looked like strength in the profile at the highs and weakness at the lows had turned around, and that this profile structure that we saw for me ended on this day. And the other thing is, like, here's the double O's, and you've also got, a failure here, a second failure here. And so that was also, interesting as well. Now, what was really difficult about then, how do you play this? Well, I suppose you've got to think about who's been in the market. So if we said this structure, this low volume bid, means that there was no other time frame in the market, then these lows are all being created by weak participants. So that means there's not a lot of liquidity in the market. So say on these earlier days, if you wanted to, play early for a break of these lows, like on this day I've been referring to again and again, then if you just sort of see, well, okay, because it opens up here on the next day, I'm going to open and I'm going to sell really aggressively for a short while. You get destroyed doing that. And all of these days have got poor lows, and any days where you just try to aggressively play for a break of them, you get destroyed. However, this day, everything changes. Now that comes to the point I was beginning to make before, which is the fact that the market now is bidding up on, weak hands effectively, day traders like us, or people, I suppose, like just in general, there's weak participation in the market, right? And so if everybody's been getting long and getting long and getting long and long at higher and higher prices, so all of these weaker hands in the market are getting long at worse prices, then as the market, if someone decides to start taking profit, it's quite easy for this to kind of sort of snowball, because it's not like this market can, if someone starts taking profit or liquidating their position, that it's not like they're going to sell through there, find a buyer who's going to soak it all up, and then this move's going to continue, because that's not what the volumes in these profiles are telling us. So if this market does start going lower, this is what makes this really tricky, is that now actually the optimal strategy, because there's going to be no absorption and kind of like bounce back, you have to do what didn't work at all for the whole week and sell the lows. Now, this is a totally uncomfortable thing to do, and to do it well, you had to know to stay out of the market all week, because you kind of burn out your mental capacity to do so. So I put one more slide in here just on the structure, because sometimes I think breaking out the TPOs just allows you to see how poor this is, but we've kind of gone over it. I mean, if I just circle some of this, you can see how poor all of these swing lows are. And then when the market does offer, I mean, here's your IB from 7 to 8 London, and then immediately you just get this offer leaving massive singles. And then the day just kind of keeps going, trading lower all day, and it resolves this, 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 and this as well. And so you can see the market really just rips back down through all of this poor structure that we've got in the market, and there really isn't, anything stopping. I mean, this comes back, it finds the same, the H and the D TPOs, same, and then just kind of one time frame. So the market never really pushes back above the seller, which is your conviction you can sell below. Now, I suppose what's key is trying to figure this out as early as possible and trying to get short as early as possible. And I suppose what I was saying before is you almost want to go for max, if you've got the signs, which is the fact that we've had a bit of a change here in the auction, that you need to kind of go for max discomfort in the environment you're in, which is selling down through here. And so that's how we should have made the trade. So talking about this week again, so markets are in low participation environment, there's very little other time frame activity. The market has been bidding on bearish profiles. The downside structure is vulnerable, there's little support in it. So that's all the things we've covered. There's a potential failure at the highs with 2 TPO and 8, so this is our change, right? There's a change in the auction structure. The market just needs to show you evidence of sort of a seller or a liquidation. So then the last piece you're looking for is just like a little bit of panic, a little bit of change in the auction structure. And that's the thing that's going to, get you to take a short. Now, so the trade is, so from the 6th to the 8th, you've just got to recognize that the market is bidding on bearish structure and stay away from it. We'll quickly look at a recording. So I've got some letters here from the 8th. So on the 8th, we had a Spanish auction and a French auction. And so at 9:30 is when the Spanish auction prices, and then at 9:50 is the French. And so generally in between the auctions, you get some selling. So selling into the French auction. And so as you can see here, like in the 1 minute on the side, like bunds are almost at the highs. And so basically, like bunds are almost at the high of the day. And so I thought, okay, I'm just going to have a go at selling. And so I sold pretty much as this ticks to 9:30, looking to see if we can get some flow down. So I thought, all right, before the auction, if it's selling, we've got these bearish profiles. I'm going to have a go and see if these auctions can bring some liquidity into the market. And so bunds are over here, this one here. So I'll just start this. And so I did this to help me, understand, what's going on in the market, and to sort of go, well, all right, we're seeing this, and when can I have, I suppose like in normal conditions, when would I expect to see sellers come in? And this was a chance. So I took this as a way to have a go at sort of seeing how this market, seeing if events can bring participants into the market to try and break those week lows. So you can see pretty much we've just ticked to 9:30, which you can see like up here, 9:30 London. And I've gotten short 2 clips. And one really good thing about this is I'm short quite near the highs. So the highs of the day is here at 85. So I've got pretty small risk, right? So if we, expect to see selling into this event, then we shouldn't break the highs. So now this is on I've gone through it so far. So this is on 2 times speed. So we'll, sorry, I need to get this back. Let's watch that again. So this is 2 times speed because it's quite slow. So anyway, so I get short here the first time, and it's just before past. Right, and so this is at 2 times speed, and you can also already feel the market's quite slow. So there was 450 lots sold, 600 lots bid, absorbed at 82s. So I try getting short again. So now 345 sold down, 200 was it 67 now, bought at 82s, 700. So we're getting some reloading at 82s. So there is, someone sitting there on the offer and reloading. So okay, that's, I mean, like this price action is not all that fast or great, but I wanted to give this a go because I needed to sort of understand and get a feel for myself how we should play out of this structure. And I suppose like a big part of it is just giving myself the opportunity to learn. Then, so this is just a random time afterwards. Must be about 10 minutes later. I just picked this time at random because really all we want to look at here is just what the price action looks like. So, we're expecting to see the selling. I'm now at 4 ticks on side with my 2 clips. And all right, what do we see? Sort of like 90 lots at 79s, now 9 at 78s, 200 lots at 79s, 8 lots up to 80s, 39, 200 into 79s. So actually, sorry, that was quite fast again. But already, I suppose, you didn't need to see more than that. So we were expecting sort of 9.30. We've got the pricing of the French auction, the Spanish auction, sorry, and then into 9.50. The French, and we'd expect to see selling from one to the other. And so we've gone 10 ticks against a profile that looks like this, and we've sold up near the highs. You would expect, with this kind of skew in the market, as in poor downside, strong upside, so the market should, you'd think an auction theory should try lower. And it's been doing, had 10 minutes to offer, and it was doing that, and it was trading clips of like 8, 200, 4, 10, whatever. Like nothing in there is screaming out that anything's going on. And so I ended up getting out of this trade not too long after this, just because, under these circumstances, this market was telling you just these 4 ticks in 10 minutes. When you'd expect some kind of like mechanical based selling because of the auction, that was telling you that, nothing's really happening. And so that was just kind of one example I wanted to show you during the week of how you can recognize. So basically, actually we'll go back to the slides very quickly. It's just the fact that moves there's that high number of failures that I talked about. Things weren't playing out. It's just your clue in here. When you see that, when too many things are failing, when you're trying ideas and it's not going, you're not getting any follow through. That's your clue to go, okay, when you've got enough sort of red flags, that's your clue to stay out. And then what your job is just to look for a change and just stay out of the market because it allows you to have that kind of mental, I suppose that like a bit of calmness about yourself. You get a chance to be on the front foot instead of the back foot. If you're losing all the time, you're taking hits, then you're under so much more pressure and there's not a lot of opportunity to make back a loss. So that's a really bad place to be. So you need to just kind of, if you've taken a loss, accept it, stop trading, but you're not stopping trading, you're becoming now sort of selectively or selectively sort of patient, tactically patient, I called it on the slide, the title. And so, that's where you want to be. So for the 6th to the 8th, you want to be tactically patient. Now, on the 9th, when you've had a change, you want to get short. And so that's what we want to look at here. So basically, the market in the IB, which is this bit here, it sells off, it has this low volume tail, and then it just flags for the rest of the time. And then immediately on the cash open, the market offers. And actually, there was something about this too that was really interesting, and this slide really helps us see it, is that we have, oops, I drew that with my finger. I'll draw it again. So just here, this is a 3 TPO ledge, and we've got this tail at the highs. So that in itself you'd think would create a bearish skew, and I've been thinking about this for a while, something for you to think about as well. If we've been trading higher on ledges at the lows and tails at the highs all week, I wasn't sure if seeing a piece of structure like that with another ledge at the lows was actually a good thing. Because if you saw that in a high volatility market, you would definitely want to get short in that flag on that to break that ledge low. But here, maybe not. But maybe what is the clue is the fact that we've done one of these, which we've got like all through here, the fact that we now have a ledge, and as soon as we break it, that in itself is a change, right? That is a change in the way that the market's been auctioning. And so that break is our first trade. So, or like our first kind of way to see this. And then you'll see here that we start to get, sort of sustained green. I mean, really on our RVOL, we're getting sustained better volumes. The volumes still aren't great, but they're better. And so, that's also a change in the market. So these are sort of two key things. Then we go, well, okay, as we've noticed from the week, there's not a lot of support in this market. And so we can, maybe get a trade on, take some profit at some stage in the morning, bank it, but you can also leave a bit of a runner because there is no reason now for this market to bid back, right? There is just no support in this market. So let's now just go and watch. Oh, sorry, I'm on the right one. This one here. Okay. Okay, so again, this is at 2 times, and 82s is that low. So again, Bund is here. It's just before the cash open. Cash opens now. Okay, so you can see the market's offered straight out the lows, offered down to 78s, and you've got what, 500 trade at 78s, 700 traded at 79s. Now you've got a total of like 1,400 traded there. So again, the market bids, 79s, we get absorption. There was 1,000 lots done there just before. And so you can already see that we've got this here's that flag. We've come down this low volume node here, and then this block of volume here. Now this actually to me felt really vulnerable, right? Like it was, I suppose the market came down and it stopped. And I thought, oh, geez, I'm not sure if this is enough. But the fact that it made me feel uncomfortable, I think, because this market's changed, that's what you needed to lean on. And the fact that now this market's now holding below that ledge at 82s, that was a price action change. And so while we're getting this absorption down here, that was actually potentially a zone that you could sell. Now, the other thing is if, considering this environment that we're in, the fact that we are now breaking below these ledges, so we've had that change, suggests that this market should liquidate. And if that's the case, the market generally searches pretty aggressively for more volumes. And so, if you keep that in mind as we watch this. So here, now trades started to sow, right? There you go, 200 lots, now trade at 78. The offer's not all that thick at the lows. Okay, 78s are taken bid, 3 lots into 79s. 3 lots offered into 78s. All right, now the market's trading to 78s. Again, 120 lots, 170 lots. All right, 78s are offered. So the market's taking a bid, but immediately offered again, and now the market's selling into the low. All right, now we've taken 76s. So we had this trade out the low, this little block of liquidity absorption here, and now we're trading lower. So now this is telling us that, okay, here I thought that bit was a bit vulnerable when I was watching it in real time. And now the fact that we are continuing lower, this is so counter to what we've seen all week. So you can actually get really short now. Like now is an ideal time to be selling. You can probably put a stop just up here at 79s, if not above 82s, because if this is a liquidation, we shouldn't be getting back into the initial balance, right? That sort of invalidates the idea. As you can see here, there's still quite a lot of volume into those. So this area here is a real low volume node, right? We've got very little volume, but now as we trade lower, we're doing significantly more volume, at each price. I might just rub some of these off before the ladder moves. Okay, so the market's holding at the low price, ticked lower, 68's into the low. Market's taken 76 bid, but immediately offered again. So now just remember that this is at 2 times speed, so it would be quite a lot slower. So that first break, when it came out the low, seemed quite fast on the ladder, but now obviously everything seems a bit slower. So just keep that in mind that, if this sort of seems like slower trade, the trade itself is actually, twice as slow. All right, 76 was taken bid, one lot traded. And so what we're seeing on that last, for example, when we were in this kind of like absorption zone, when the market then actually bid back to 70 lines last time, just a really small bid. And then we're sort of seeing it here when the market rotates up, there's not really any buying. The market goes down, takes 76, 75, 74 off and starts trading into 73. So this is looking like a really good bid. So again, recognizing the fact that we broke lower, so we broke this ledge here, change, tick. So you can market held offered and absorbed below, change, tick. Market comes below and stays bid. So you could sell here, you could sell here, you could sell here, you could sell here. Any of these prices are good because now you're not expecting the market to come back. Your max risk is kind of 82s at this point. Probably shouldn't get into this low volume area here. And so you want to get all your size on early, but you have to also understand that that's kind of like maximum point of discomfort in the trade. All right, and so this market now continues to offer. 25 lots into the lows at 68. The lows are taken offered. 400 lots down to 67. So you can really see that there's no buying at all here, right? Like this market's had a really clean offer. Now just taken 66 is offered. And then 34 lots down into 65s. So now we're seeing we saw like a bit of buying there at 67s. 67's taken bid. So now maybe we've got like a little bit of profit taking between everyone who's got short. That might be the end of the initial spike. Yeah, and so that was the first low. And so that was what I wanted to talk about here because I just think the key about this is getting on the trade. Other than that, I feel that that the rest of the move makes quite a lot of sense, and you just have to be patient enough and just recognize that in this environment things can be a little bit slow, but just recognizing that there's no good support below and that you can just sell it and hold on. And so this was that break. This is where we went sideways for a while with that good absorption, and as we started holding an offer below, this is where you want to get short. Just anywhere in here, stop up in here in this low volume area. And then, we come here and this is where we ended the recording. But, as this market pulls back into the zone that I was talking about, you should get short in. Well, you can be lining up some offers here to look to add in on a pullback if you didn't get short enough. And then you kind of know, well, all right, I know my stop's up here now. I've got my change. And then after that, it's just kind of letting it run. And you'll notice that 67s level that I talked about earlier is this one here. And so, if you use this pullback back above to get short, the market comes back down and then it begins to hold it again. And you've got this offer for the rest of the day. So, the market then comes below, holds it on the retest, and continues to offer. And so that fits with the theme that, that was a significant level, as a trigger point for this trade. In terms of the Thursday, making it quite mechanical low at it. And so holding below that inflection point, and the fact that there's also that support from Thursday, holding below that support, adds to your bearish conviction. So takeaways. So it's important to recognize that there is little other time frame activity in the market. This is important because overtrading is so costly where there are few opportunities. So again, you need to figure this out as fast as possible, right? Because if you're taking trades on Monday, Tuesday, Wednesday, Thursday, because the market looks bearish, from the profiles, for example, because this bid looks horrible, then you're going to lose on all 4 of those days, and you're only going to get Friday left. And on these ones, market's often cruel, and by Friday you're so worn out and you just think it's not going to go that you don't take the one trade that goes. So that's really important. Then the close for this are consistently low volumes, ledgers, and just poor market response to inputs like news and data. So anything that kind of, when you see some poor structure in a market like, say, a ledge in the S&P under good, under good volatility, well, you're going, well, all right, that should get broken, or any market, even the bund under a bit of volatility. Okay, I want to play for a break of that. But then when you start seeing them everywhere, you've got to ask yourself, okay, if I've got poor structure everywhere I look, is this because there's just poor structure in the market, or is this because there's poor participation in the market? And if you're getting that, then you've got to start to question it in a different way. So then, as I sort of said before, overall signal noise is low, which means there's a high frequency of failures, which is why this is costly. So in this environment, edge is found by strategic patience, or being selective about your trades. So that is consciously waiting for a setup and a trigger. So I showed you one example of strategic patience this week, which is just recognizing that we are in this kind of low participation environment. And that's, the close were all these things that I wrote here. And then looking for a change. So those close gave you a setup, right? You had this vulnerable, this weak bid, but it didn't give you a trade, right? The trade came when there was a change, and the change is that trigger. And then the fact that we started to break some of that structure on the Friday, that was like, okay, I'm getting in now. And so I showed you one example of the strategic patience. But if markets stay like this, and which they might do now for a few weeks, even like oil, which was quite volatile, has been a bit stuck in a range, you might actually get quite a few more opportunities to practice this. So while the market's still giving you a high frequency of failures, this approach to the market is the only approach that I know that can give you edge. Otherwise, overtrading will just cost you so much because you don't have the opportunities to get it back. So hopefully you see this in time, and hopefully you can incorporate at least think about this for your trading. I mean, I think it's pretty realistic that, in this environment, you start thinking about this for the first time, you still get it wrong the first time, maybe even the next time you see this environment that you get it wrong. But hopefully this gives you some sort of like spark some thought that can help you kind of create some patterns or ways to approach the market for firstly, not to lose much money in this market, because that's more important, because there's so many chances to lose and not many to win. And then if you can master that, then knowing when to step in and to take profit, I suppose that's step 2. But step 1, which is where I'm at now, which is avoiding trading, which I did a reasonably good job of this week, trying to master that and at least hold on to your capital is a really good start. So anyway, I hope this was thought-provoking. And if these markets stay quite quiet as they are, this sort of high frequency of failures kind of market, low participation, then keep this in mind, and hopefully it helps you trading. But anyway, have a good week of trading, everybody, and I'll see you next week. Thank you.
If you find this video interesting, if you want to go deep into the Axia training method and how our trading team of 7-figure traders develop setups and strategies, and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.